explain on Mr. Daisuke's resident status from year of assessment 2022 until 2025. Resident status is important because it determines how a person is taxed in Malaysia. To determine whether a person is a resident or non-resident, we refer to Section 7 of the Income Tax Act 1967. For year of assessment 2022, Mr. Daisuke stayed in Malaysia from 16 July until 28 August, which is only 43 days. Since he did not stay for at least 182 consecutive days and there was no qualifying linking period at that time, he is classified as a non-resident. In year of assessment 2023, he stayed from 1 October until 31 December, which is 92 days. Although this is less than 182 days, he qualifies as a resident under Section 7, Subsection 1, Paragraph B because this short period is linked to his continuous stay in 2024, where he remained in Malaysia for more than 182 consecutive days. Therefore, the 2023 stay can be treated as part of the qualifying period. In year of assessment 2024, he stayed in Malaysia from 1 January until 18 May, then temporarily left Malaysia from 19 May until 31 May to visit his seriously ill wife in New Zealand. This temporary absence is still counted because it is an approved temporary absence under the Income Tax Act. He then returned on 1 June and continued staying until 30 September. Therefore, his total continuous stay exceeded 182 days, making him a resident under Section 7, Subsection 1, Paragraph A. Finally, for year of assessment 2025, Mr. Daisuke stayed in Malaysia from 10 March until 30 June, which is only 114 days. Since he did not meet the 182-day requirement and there is no qualifying linking period with another resident year, he is classified as a non-resident. Therefore, Mr. Daisuke's resident status is, for 2022 is a non-resident, 2023 resident, 2024 resident, and 2025 is a non-resident. Next, I will explain the computation of Mr. Daisuke's employment income under Section 4, Subsection B for year of assessment 2025. Employment income is divided into several categories under Section 13 of the Income Tax Act. First is Section 13, Subsection 1, Paragraph A, which includes cash remuneration received from employment. This consists of salary of 102,000 ringgit Malaysia, travel allowance, entertainment allowance, childcare allowance, bonus, share option benefit, and reimbursement. However, some allowances enjoy tax exemptions. For example, only 6,000 ringgit Malaysia of the travel allowance is exempt, so the remaining amount is taxable. Similarly, childcare allowance is exempt up to 3,000 ringgit Malaysia, so only the balance is included as taxable income. The bonus and share option benefit are fully taxable because they are employment benefits received by the employee. Therefore, the total taxable amount under Section 13, Subsection 1, Paragraph A is 137,500 ringgit Malaysia. Next is Section 13, Subsection 1, Paragraph B, which covers benefits in kind. These include fully furnished accommodation, company car, driver, and overseas leave passage to France. The leave trip to Langkawi is fully exempt because it is a domestic leave passage. However, for the France trip, only 3,000 ringgit Malaysia is exempt, so the remaining 1,400 ringgit Malaysia is taxable. Dental treatment and fitness membership are not taxable in this case, so they are recorded as nil. Therefore, the total taxable benefits under Section 13, Subsection 1, Paragraph B amount to 18,260 ringgit Malaysia. Moving on to Section 13, Subsection 1, Paragraph C, This relates to living accommodation provided by the employer. The taxable value is calculated using the lower of the defined value of the accommodation or 30% of the adjusted employment income. In this case, the defined value of 20,400 ringgit Malaysia is lower, so this amount is taken as the taxable value of the accommodation. After adding all taxable remuneration, benefits in kind and living accommodation, Mr. Daisuke's gross employment income is 176,160 ringgit Malaysia. Finally, allowable employment expenses are deducted. These include official entertainment expenses, travelling expenses after deducting the exempt portion, and rental paid by the employee to the employer. After deducting these allowable expenses, Mr. Daisuke's statutory employment income is 148,660 ringgit Malaysia.
Next, let's move on to business income for Brown Enterprise owned by Mr. Daisuke for the year assessment 2025. We start with the net profit of 268,700 from financial statement. The first adjustment is drawing of 12,500. Mr. Daisuke took goods from the business for his personal use. Since these goods were not included in sales, we need to add 12,500 back to the business income. Next, we deduct income that is not considered business income. This include gain on disposal of machinery of 5,000, interest income of 3,500. These are taxed separately, so they are deducted from the business income calculation. Now we added back expenses that are not allowed for tax purposes. For entertainment, the company spent 13,000 on a reward trip for top performing promoters. This expense is fully deductible, so no adjustment is needed. The company also spent 4,000 on annual dinner for employees and clients. Since only 50% is deductible, we add back 2,000. Next is depreciation of 9,500. Depreciation is an accounting expense, but for tax purposes, it is replaced by capital allowance. Therefore, we add back the full amount. For remuneration, Mr. Daisuke's salary, bonus, allowance and EPF contribution total 30,000. Since he is owner of the business, these expenses are not tax deductible, so we add them back. For employee remuneration, only excess employer EPF contribution of 4,375 is added back because it exceeds the allowable limit. For insurance, both the fire insurance and medical insurance for employees are fully deductible, so no adjustment is required. For professional fees, the tax penalties of 5,200 and legal fees of 1,200 are added back based on our group computation. For repair and maintenance, the general vehicle maintenance is deductible, so no adjustment is needed. However, the renewal of office rental agreement 3,200 and the replacement of manual glass door with an automated glass door costing 14,600 are capital expenses, so both are added back. For bad debt, we added back 1,300 for loss on an employee advance, 2,900 for bad debts written off, and 10,000 for the general provision for doubtful debts. The business also qualifies for double deduction because it employs a disabled employee, which is Dahlia. Her salary, bonus and allowance total 23,000, so this amount is deducted again as a special tax incentive. After all this adjustment, adjusted business income is 342,375. Finally, we deduct the capital allowance of 120,185, which replace depreciation for tax purposes. After deducting the capital allowance, the statutory business income is 222,190. Next, partnership computation for the year of assessment 2025. We begin with the net profit of 54,060. The first item added back is depreciation of 4,500 because depreciation is not deductible for tax purposes. It will later be replaced by capital allowance. Next, we add back a partner private expenses which includes partner salaries of 54,000, partner's drawing of 1,050 and interest on capital 7,145. These expenses are not business expenses because they are distribution of profit to the partners. After editing all these items, the provisional adjusted income becomes 120,755. Next, we deduct the same partner private expenses because they will be allocated separately to each partner. These are salary of 54,000, drawing of 1,050 and interest on capital 7,145. After deducting these amounts, the divisible income is 58,560. The divisible income is divided into 2 periods because the partnership changed during the year. January to May, the divisible income for this period is 5 months. So 58,560 times 5 months over 12 months, and you will get 24,400. This amount is shared according to the partnership agreement, which is Daisuke receive 40%, which is 9,760. Leona receives 30%, which is 7,320. Same goes to Karen. June to December, the divisible income for this period is 7 months. So 58,560 times 7 out of 12. So the amount is 34,160. According to the new profit sharing ratio, Amirul received 40%, which is 13,664. Same goes to Karen. Leona received 20%, which is 6,832. Next is each partner's share of divisible income is added to their salary, drawings, and interest capital. The adjusted income for each partners is Daisuke 20,285, Leona is 41,784, Karen is 30,952, and lastly Amirul is 27,734. Final capital allowance is deducted from the partners who are entitled to claim it. After deducting the capital allowance, the statutory partnership income is Daisuke 20,285, Leona 34,504, Karen 27,312, and Amirul 20,454. Since this assignment focused on Mr. Daisuke, his statutory partnership income for the year of assessment 2025 is 20,285 ringgit.
Next, I will present section 5.0 and section 6.0 of our assignment, which are industrial building allowance and the computation of income taxability for Mr. Daisuke for the year assessment 2025. Firstly, I will explain about industrial building allowance, also known as IBA. For Mr. Daisuke case, we identify two main categories of qualifying expenditure, which are plant and machinery and the factory building. For plant and machinery, the costs involved are the cost of preparing the site to install the machinery amounting to 275,000 ringgit and heavy machinery costing 85,000 ringgit. Therefore, the total qualifying building expenditure for plant and machinery is 360,000 ringgit. We also apply the 75% rule to determine whether the site preparation cost can be included as qualifying expenditure. Since the cost of preparing the site is more than 75% of the cost of the machinery, the expenditure is allowed to be included. Therefore, the qualifying expenditure remains 360,000 ringgit. For year assessment 2025, the initial allowance is calculated at 10%, which is 36,000 ringgit, while the annual allowance is calculated at 3%, which is Rm 10,800. Therefore, the total allowance claim is 46,800 ringgit, leaving a residual expenditure of 313,200,000 ringgit. Next, for the factory building, the qualifying expenditure includes architect fees of 28,000 ringgit, cost of preparing plans of 22,000 ringgit, construction cost of the factory warehouse of 650,000 ringgit, and installation of water and electricity of 33,000 ringgit. The total cost is 733,000 ringgit. However, Mr. Daisuke only used 85% of the building as a factory, while the remaining 15% is used as an administrative office. Since the administrative portion exceeds 10%, only 85% of the building cost is eligible for industrial building allowance. Therefore, the qualifying expenditure for the factory building is Rm 623,50,000. For year assessment 2025, the initial allowance is 62,305 ringgit and the annual allowance is 18,692 ringgit. After deducting this allowance, the residual expenditure is 542,53,000 ringgit. Moving on to section 6.0, which is the computation of income taxability for Mr. Daisuke for year assessment 2025. First, we calculated the total statutory income from different sources. The statutory employment income is 149,560 ringgit. Statutory business income is 222,190 ringgit and statutory partnership income is 20,285 ringgit. The total income from these sources is 392,035 ringgit. Next, we included other source of income. Mr. Daisuke received rental income amounting to 12,000 ringgit. However, expense such as the installation of water heater amounting to 2,800 ringgit are deductible because they are related to the rental property. Therefore, the net rental income is 9,200 ringgit. The royalty income from the book titled How to Speak German for Beginners is not included as it is not taxable under this computation. After adding the rental income, the aggregate income becomes 401,235 ringgit. Then, we deducted the business loss of 45,355 ringgit and approved cash donation to Save the Children Foundation amounting to 37,000 ringgit. This result in total income of 318,880 ringgit. After that, we deducted the personal reliefs available to Mr. Daisuke. These include personal relief, disabled child relief, lifestyle relief, medical expense, insurance premium, parent medical expense, and other eligible relief. The total relief claim is 53,150 ringgit. Therefore, the chargeable income for Mr. Daisuke is 265,730 ringgit. Based on the tax rate applicable, the first 250,000 ringgit of chargeable income is taxed at 46,900. The remaining 15,730 is taxed at 25%, resulting in 3,932.50 cents. Therefore, the total income tax liability for Mr. Daisuke for year assessment 2025 is 50,000 ringgit 832.50 cents. In conclusion, the industrial building allowance helped reduce taxable income by allowing a deduction on qualifying expenditure, while the income tax computation determines the final tax payable after considering all income sources, losses, donation, and also personal relief.